All right, we're back. This is episode 8 of Market Forensics, brought to you by Ask Bid. If you're unsure, just ask. And I'm going to tell you. I'll be the first one to tell you. You know me, it's Mr. Wall Street, Bid God, Don Wick, reporting to duty. Yeah, you should salute me because I'm uh, breaking the chains. I'm liberating you traders and helping you to exit the matrix. You're following a lot of these false prophets that are doing false profit trading. And in this episode, we'll talk about how ICT taught sim traders to chase ghost liquidity, how they've created a bunch of simulation superstars. He said he was the original, that his strategy was born, not borrowed. We'll show you how he borrowed a lot from Wyckoff and Sam Seiden and a lot of the liquidity strategies that were brought in the 80s and 90s. That his insights, he said his insights were so unique, he'd offer $5 million to anyone who could prove otherwise. But what if the real lie wasn't the strategy? It was the stage it was performed on. See, smart money concepts work with smart infrastructure. Okay. But if they're in a retail infrastructure environment, then it can fall short even after successive wins. So, welcome to Market Forensics, episode 8, where we don't do drama, we do doctrine enforcement. Strap on your seatbelts. We're live. So, smart money, again, smart money strategies, such as supply and demand, fair value gaps, liquidity sweeps. These strategies do work in markets such as the futures market, the equities market, and options on equities, futures. But let's not be mistaken. We're talking actual options, not binary options, right? In markets where there is really true institutional grade order flow, so you're able to do access to able to analyze because you have direct market access. All right, so this is the professional infrastructure. But when we see a lot of the slides and examples that are used in a lot of the ICT courses taught by Michael himself, there is no DOM. All right. There is no real custody or market connectivity. It's all on MT4, on CFDs, or your shady offshore brokers. And if you're trading the size that he claims to be trading, if you're professional like he claims to be, and he's giving you inside information. Remember the inner circle of traders? That means you're trading with market terminology, right? Market strategies, right? Then you would obviously want to be tied to the market, want to be connected to true liquidity, to true order flow, right? Real custody. But instead, ICT, they sold the image of institutional mastery, fed you order blocks and market structure, but on dumb infrastructure and dumb pipes, right? With dealer intent. So, but here's the forensic reality. You were trading on a pipe that doesn't even connect to true market liquidity or a true matching engine. Okay. As I said before, no DOM, right? No depth of market, no custody, no routing. Okay. No national best bid or offer, an NBBO. Just price simulations controlled by brokers that you funded. So if ICT happens to be on the inside, why wouldn't he teach you to connect directly to the market? Why would he teach you smart money concepts and try to apply them to dumb money? So while he taught smart money concepts, you were executing them through dumb money infrastructure. So what's the result? Simulation dressed as strategy, a mirage with a subscription fee. Now, I want you to think about it. Some of you have shown spurts of success. right? Sprints where you have, your account shows some growth. And then all of a sudden you pull right back into a drawdown or consecutive losses. And oftentimes it's not the strategy, it's not you, it's the market you're trading in, it's the pool you're trading in, it's the counterparty to your trades. Now, if we look at an actual, depth of market, right, a DOM, you're actually going to see the order book. And with the order book, I should be able to see what's on the bid, what's on the ask. Now, this is very important to be able to truly see liquidity. If I can actually see the delta, right, who is controlling a particular level on the market, if the bids are outweighing the ask, then I'm able to see, where I should be able to get in, where there's an imbalance, right? But this is what ICT never shows you because this is what makes the simulation collapse. Real order flow equals receipts. Simulation is just theater. When I'm trading in the market, there's bid-ask aggression. There's field sequencing. There's real latency where you might not get filled at the level because there isn't enough on the other side. So therefore, you have to adjust your orders. There's also order rejection where sometimes you get rejected out of the queue, right? So here you're looking at real order flow, queue priority, right? Timestamp fills. This is what the market actually looks like, right? When smart money moves. I encourage you just to Google it. Moving forward further in the series, we're going to give you real live examples, but for now, this is the setup. I want to introduce concepts to you. And again, the reward goes to the researcher. So that means you dig in deep, right? This is on a serious note here because there's been a lot that's been taught in the market. I mean, hey, one thing I'll give hats off to Michael from ICT because he did give you guys free information, right? Free knowledge that was structured in a course format that introduce smart money concepts. But if you just apply these smart money concepts to markets with true clearing, right? Honest and transparent, field sequencing, true bid-ask aggression instead of the broker being your counterparty, you give your strategy a chance to grow some legs. Okay? Now, when you compare smart money with what ICT shows, there's no fill breakdown, no receipts. You're able to get a fill at any particular level because the broker knows that eventually, you're going to lose or they're going to cause your loss. But once you actually show the dome, right, you can actually see where the liquidity is, where the liquidity gaps are, or where the liquidity sweeps or stop hunts might occur. Smart money needs real rails, not just chart drawings by charlatans. You hear that, Charlene? Not replay tricks, not metaphors, but actual feels. So we have to understand clearing audit. This is real custody, right? And when you know what you're looking for, right? When you know better, you do better. You want to know if your trade is real? All you got to do is just ask one simple question. Where is it cleared? Which exchange is it being cleared through? If your fill isn't routed to an exchange and cleared by a third party, it's not a trade. It's a simulation. It's theater. ICT teaches risk transfers, but the platforms that he promotes can't even custody transfers. You see these trades being placed on MetaTrader 4. He even photoshops statements, but you don't got to Photoshop the statements when it's MetaTrader 4, guys, because there's no clearing, no audit trail, which means no accountability. There's never an entry into the market. It's casino with candles. Again, most traders, I get it. There's a place for some of these exchanges. I'm sorry, brokerages, right? There's a place for some of these markets like Forex. Forex is like the entry-level market for traders. I'm not talking about the actual interbank market where the commercials trade, the institutions trade, and the real retail side of traders that are, your traders that trade professionally, right? A lot of them would prefer to trade currency futures. But for those that actually do trade Forex, hey, if what you're doing is working, right? If it's not broke, don't fix it. If you're smart enough to go higher time frames and apply smart money, right? You may be able to have a nice streak where you can hit your broker and withdraw before, you find it collapsing, right? But understand there's no actual clearing. Your interest is not aligned with the brokers. So Anybody who is claiming to teach smart money concepts would go and do it on smart money infrastructure. And if I'm a professional making hundreds of thousands of dollars a year, or even millions, then the margin requirement should be an issue. The risk per trade shouldn't be an issue. The overnight margin on some of these futures contracts shouldn't be an issue. So you have to ask yourself, why would you allow to custody your money with somebody that's offshore, not regulated, and can't really even help you? The local regulatory agencies can't even help you or save you when you're trading with an offshore shady broker who is not in the same jurisdiction as you are. If I'm in the US, I can have the NFA, the CFTC, the SEC, they're going to be able to step in if I've been taken advantage of. So a lot of you go offshore because of all the extra leverage that you get. But I'm here to tell you, you really don't need, the 500 to 1 or the 1,000 to 1. You can do just fine with 50 to 1 and good risk management. So understand, if your field doesn't touch the market, it isn't a trade, it's a stage. And you're the one being played. So let's break it down like traders. Here's what happens when a real order is placed. When you hit that click, that buy or that sell, right? It's routed through a fixed market, through an exchange that controls that instrument, whether it be CME, ICE, if it's equities, you're talking, the New York Stock Exchange or NASDAQ. It hits the market and it's matched and filled and then cleared. Now let's do the ITC setup on MT4 or MT5. You hit click and the broker receives the order. The broker is then going to simulate the price. They'll pad you, right, with some slippage padding, right? Even more slipping you on the way in and slipping you on the way out, right? That's that hidden tax. They'll also fabricate the P&L. It never sends it anywhere. It's all internally within the broker's risk desk. So no fill ever touches the market. So how are you a smart money trader when you are not routing to the smart liquidity? How can I trade liquidity gaps and fair value gaps when I am not looking at the fair value? A lot of you aren't even looking at the COT data, the commitment of traders data. This is smart money. So without the smart money infrastructure, without trading with smart money in smart money pools, in smart money infrastructures, you can't have smart money concepts. So, again, I want to give you side-by-side comparisons. We'll start to move to those as we get past, to episode 10 and on. But for now, I want to introduce these concepts. And again, the reward goes to the researcher, so you can then go in and do the research. All right? Don't believe me. Do the research for yourself. I'm trying to help you actually show some consistency, consistent profitability. And you can do that by exiting the matrix. As more and more of you go through this market forensic series, you'll get to understand that it's the natural progression of a trader. It's the natural growth of a trader. I started out trading Forex. Forex used to be one of my favorite markets, but one thing I found, I was in the same position that Jesse Livermore was faced with these bucket shops clipping and chipping me off after I'm having, consistent wins. I'd have forced drawdowns from faulty candlesticks, manipulation of the spread, or delayed fills, or just no fills at all. If you understand how brokers play tricks with the spread, a lot of this can be neutralized when you go to the higher time frame. But if the broker's shady, just to begin with, a lot of times some of them will, withhold withdrawals. So when you're trading and the broker is the counterparty, your interests are never aligned. Okay. So the volatility decoder, okay, when you're actually looking at, certain things such as news, certain moves that may happen where you get huge parabolic moves and you're not checking other price charts or checking other candles. A lot of times these are liquidity sweeps inside that broker's liquidity bucket where they can manipulate price and then turn around and completely change the picture a week or two later. ICT told you to trust the volatility, to enter on imbalance, to scale in on the fear. But what he never told you was the volatility is only real when it's rooted in custody. When I can truly look at level 2 data Depth of market to see what's on the ask and what's on the bid. These spikes that you see on a MetaTrader 4 platform, they may look like, volatility. They may look violent, but if there's no clearing destiny, it's just a candle stunt. It's just a spike created by the broker's script, the broker's line of code. Volatility without custody is just noise. With custody, it's an actual signal. It's a market signal. And market forensics, we've built the tools to be able to put this under a microscope and allow you to see the difference. This will help you to get more consistency and get on the road to the right track to profitability. All right. So when we think about Michael, right? He did a good thing by offering a lot of these concepts. They're free, but I'm a firm believer that practice makes permanent. Perfect practice makes perfect. So when you see, it really is just theater. Another performer. He drew down to 90% and claimed it was broker glitch or fill slips. Volatility was unexpected. But if you enter smart money strategy, right, within a smart environment, you alone could do a lot better than this person who claims to be a professional. Really, it didn't need you to cause his failure. It was self-destruction at its finest, right? So think about it. If your entire smart money strategy dies on the platform that you teach on, was it ever a strategy to begin with? You can't claim to be the oracle of execution while simultaneously blaming the tools that you endorsed. So a lot of these ICT strategies were taught on MT4. They live on MT4 and MT5, and they die on MT4 and MT5. So the prophet failed. That means the prophecy was a fraud? No, because smart money concepts aren't the problem. It's the smart money infrastructure that was missing. Okay? Understand, it's very, very important that we understand that, and I drive that home. It's not the smart money concepts. It's that you were missing the smart money infrastructure. You're trading on dumb money. This is the real legacy, a simulation so seductive, right? That every clone copied it. Now you see everybody talking about fair value gaps and liquidity gaps and order blocks and all this stuff, but just really, it's all just regurgitation. But no one's showing routing receipts. No one's showing custody. No one's showing field logs or audit trails. Most of them are just using platforms that allow you to manually go in and cherry pick trades and only put your winners. Okay? It's smart money cosplay on dumb money servers. So if you're quoting ICT but can't execute on regulated infrastructure, you're not a trader. You're just another charlatan. And you're no better than Charlene. You're a parrot in prop firm pajamas. You heard that? For those in the back. So simulation equals illusion. Dopamine. Custody is clarity. And market forensics, we're here putting them all on trial. So I want you to, just think for a second, and if you're trading on a demo and you know it, that's fine. But for those of you that think you're in the real market, but you're still trading on, in a simulated environment, you give yourself an opportunity, give yourself a chance, and move to the actual market. Move to the big leagues. I promise you, you'll start to see some progress. ICT is not a method; it's a mirage. When you're implementing it in a mirage, okay? It only works on infrastructure, that has the smart money and routes to smart money. If you look for liquidity gaps with level 2 data, you might see some success. But if you're looking for, liquidity gaps and sweeps and fair value where there's fake volume and fake value, then you're the value. You're the product. So the charlatans, they simulate confidence. All right. And we're going to go deeper into this as we start chopping up the matrix. Share, like, subscribe. I want you to download our forensics kit. The forensics kit here will help you to be able to see some of the challenges that you have and limitations that you have trading on MT4 versus a real broker that's going to clear your trades. This is episode 8. Stay tuned for episode 9. But like and subscribe. Join the community of real traders where we are auditing the infrastructure, auditing the broker, auditing the prop firm, or the so-called guru. With that being said, you know who it is? Mr. Wall Street, Big God, Down Wick, signing out of this bitch. Until next time, peace.